The gap up in the Dow yesterday is usually an illustration of exuberance at the top. It sold off a little bit today, but came right back up. This is probably a function of the probabilities of a budget being passed in this evening's voting. However, the fact that they gapped it up still puts up that warning flag, especially in the overbought condition, that we want to start watching for potential selling. That was apparent in the Nasdaq that opened lower, but it came back up to where it was trading above where it opened. So even though the Nasdaq was down, they were buying going into the close. But it will be important to see what they do tomorrow, because this was the first break after a lot of indecisive trading followed by a gap down, especially in the overbought area, that the bears might start taking control. So it will be important on how they open the markets tomorrow. Obviously, if they start trading positive, the T-line's still acting as support. If they open lower and start trading down, the indecisive trading and the gap down is telling us the selling force is taking control. This analysis becomes much more clearly defined, knowing what should happen based upon specific candlestick signals. And the patterns also help us determine which positions to stay long and which ones to come out of. Our recommendation on PLSE was based upon a J-hook pattern setting up. Notice how it broke out with a slow curve through the 50, had a strong move, pulled right back to the T-line, and started back up again. This tells us the bulls are still in control, that we can stay long on this chart with much more confidence that there's more upside in spite of what the overall market direction might do. That same analysis can be applied to stocks like AKAM, where we can see that the indecisive trading is supported right on the T-line. Now they've told us which decision they've made. So we've got essentially a slow curve potential breakout that makes our next target the 200-day moving average. Again, this is based upon human nature recreating patterns that tell us what's happening in investor sentiment, which occurs time after time. And it also works just as well on the short side. We can see the doji, bearish confirmation, gap down through the T-line. And today we did a doji, lower doji on RIG. Still makes it a viable short, because we know if it opens lower, we've got a doji sandwich probably coming back to fill this gap and or the 50-day moving average. So knowing where the sell signals and the strength of the sell signal occurs allows the candlestick investor to go with much more confidence into a position, knowing where the likely targets will be. That'll be it. We'll see you in the chat rooms.